Welcome to the Realty World Indy Buyer Guide. This guide is designed to help you navigate the process of purchasing a new home. We're going to be covering a number of things in this short video, talking about a little bit about selecting a real estate professional, financing your new home, and of course, searching for a home, making a purchase offer, applying for your mortgage, talk a little bit about the home inspection process and title work. Also things to think about such as your homeowner's insurance and transferring utilities. And then we'll talk about the closing statement and your wire transfer and attending closing at the end. So that's the agenda for our little session here. Talk a little bit about selecting a real estate professional. This is one of the important steps to take. One of the first things that you want is to find an experienced agent, somebody that's done this before, will be more helpful to you, and preferably a full-time agent. In the real estate industry, there's full-time agents and there's part-time agents. Full-time agents make their living strictly by real estate and tend to handle more transactions and be more experienced with transactions than part-time agents. Also, find an agent that will actively search with you and will look for homes for you and try to find the best home that's available for you. Remember, there should be no cost to you for working with a buyer's agent. There's the buyer's agent is paid by cooperating brokers and does not charge you for their services. And you need an agent that's going to be willing and patient with you. There's a lot of details in a buying situation, buying transaction, and you need someone who's willing and patient to explain the process to you. At Realty World, our mission is simple, and that's to help you get the most house for your money and to give you peace of mind throughout the whole process. Now, one of the first things you need to think about is financing of your new home. In other words, how are you going to pay for it? First thing that you want to think about is getting pre-approved. And that is a key step in purchasing a home, is to get pre-approved for your mortgage. And what that will do for you, first of all, let you know how much you can spend on a new home. And second of all, when you get ready to make an offer on a home, it will show that seller that you are a serious buyer and that you can afford to purchase their home. Now, selection of your mortgage lender is important. Don't just look for the lowest cost, but look for the right lender that will take you through the process and get the loan closed for you. And if you don't have a mortgage lender that you're already working with, I've got some great mortgage lenders that I can refer you to. Down payments, your mortgage professional will explain all the different programs that are available for getting your down payment. You don't need as much money as you think for a down payment. Sometimes it can be as low as at 3%. Sometimes you don't need any money down. And also, your mortgage lender can help you with sources for down payments, places where you can get the money that you need to purchase a home. Your lender is going to need some basic information about you in order to do a application for you. So they're going to need things like tax return information and income and things of that sort. So you can be prepared when you contact your lender with that kind of information. Now, once you've gotten pre-approved, it's time to find that new home. It's time to search and find a new home. One of the first things that you want to think about is using accurate information. A lot of people will get on Zillow or Trulia and search for their home, and that's not what you want to do. First of all, you want to use the BLC, which stands for Brokers Listing Cooperative, and that used to be called the MLS, or Multiple Listing Service, and you want to use a BLC search portal. Now, the reason is that is the most timely and accurate information available. That's exactly where realtors like myself go to look for information, factual information about homes. So you want to use that. Zillow and Trulia rely upon a feed coming from the MLS to them. They don't update that feed immediately. Sometimes it can be several hours old. A lot of times on their portals, you will find homes that are actually sold. They're no longer available on the market, but they haven't taken them down because the agent hasn't claimed them as sold. And so you can find homes on Zillow and Trulia that just aren't available anymore. One of the important things to do is determine what you must have versus what you would like to have. And so you want to make a list, two lists. One is, I must have this in my new home. That's on the first list. The second list is, I would like to have these other things. Decide on the price range of home that you want. And of course, your pre-approval will help you in that area. Your loan officer will help you understand how much home you can afford and what would be a good price range for you to look in. Then you want to determine what is your target area. In other words, maybe it's a school system that you want, or you want to be close to work, or you want a certain kind of community to look in, to live in. So what is your target area? What are your target neighborhoods? So you might even want to drill down to those neighborhoods that you think you would like to live in. And use your agent as a resource. Your agent can help you locate the appropriate information, and your agent can help you with information of areas that you might like and neighborhoods you might like, things of that sort. But be prepared to act quickly. Remember that the best houses sell quickly. And so if you find a house that you like, chances are somebody else might like that same home. And so you want to act quickly. You don't want to wait too long because someone else may end up buying that house out from under you. So it is important to be ready to act quickly. Now, what about bank-owned properties? Because one of the things that people tell me a lot of times is that, they want to buy a foreclosure because then they can fix it up and they can get some immediate equity in that property. Well, first of all, with bank-owned properties, one of the things I want to say is buyer beware. They are not always the best deal, and sometimes there's some hidden defects there that you might not find out about, and I really caution you to beware. Bank-owned properties are usually best purchased by investors who can take on the added risk. Keep in mind that bank-owned properties are purchased as is, which means that the bank generally will not make any repairs. And bank contracts are written to favor them and to protect them. So generally, when you purchase a bank-owned property, you have to sign a big, long, multi-page addendum that basically puts the bank in the favored position and doesn't really offer any protection to you as the buyer. Also, you may have to bid for the property, and when you bid for a property, that means it gets sold to the highest bidder, which means that instead of getting a good price for the property, sometimes you overpay for the property. So bidding is not a good way to get a property because sometimes you tend to overpay. Also, it can extend the purchase process. Working with a bank, sometimes they don't respond in a timely fashion. A lot of times you'll write an offer on a bank-owned property and it may take 4 or 5 days before they respond back. They may ignore deadlines on the purchase agreement and on your offer. So it can extend the purchase process, and they may not be a good buy as you may think they are. For instance, if a bank-owned property is priced at $20,000 under market value, but it takes $20,000 to fix that house up so that it is worth market value, then it's really not a good deal. You might as well buy a house for $20,000 more and get one that the work has already been accomplished, because you're really not going to save any money. You're not going to add any equity. Also, keep in mind that there's a tremendous competition for bank-owned properties. And again, that tends to drive the price of the property up higher. And of course, with a bank-owned property, there's no recourse after the sale. If you find out that there was a hidden defect, the bank is not going to care or come back and help you out. Let's talk a little bit about new construction. If you're a first-time home buyer, you may not find very much within your price range. But if you're a move-up buyer, it's a little easier to find homes. It can be a good option. There's no cost to you to use an agent, by the way, in the process of purchasing a new home. And new homes do carry a warranty. New home companies, builders, typically have what they call a deal du jour, or what I call a deal du jour, and that means that every month they have a particular deal that they're offering, and it might be pay your closing costs or give you a certain amount of money and free options, things of that sort. That deal will change monthly, but it is designed strictly to get you to act in a timely fashion. So just beware of the deal du jour. One thing with a new construction, it does allow you to get what you want. You can determine some of the options with it. And of course, a new home is fresh and clean. But remember, extra costs like window coverings. When you buy a new home, there are no window coverings over the windows. So you'll have to buy window coverings, blinds, things of that sort. Those will not be included in the sale. And so you're going to have some extra costs there. Also, you've got landscaping that you have to keep alive. So you're going to need to water the landscaping and the yard and the sod to keep it alive. And that may cost a little bit extra in water costs to do that type of thing. I definitely recommend that you get a home inspection whenever you purchase a home like a new home. And there's also possible roof issues. If they put the shingles on during the winter months or colder months, they may not seat properly. And then when you have windstorms, those shingles tend to blow off. So you want to try to build your home when at all possible during the spring and summer months. Also, sometimes to get the builder's deal du jour, you're required to use their lender. And sometimes their lenders don't necessarily give you the best deal, best interest rate, best costs, and things of that sort. So sometimes you can pass up the deal du jour, use your own lender, and actually save money. Remember that the person who works in the model is working for the builder and not for you. So your agent can help you, and when you go into a model, the best way to avoid sales pressure is to let the person in the model know, I am working with another agent, and here's their card or here's their information. If you do that, then that salesperson in a model won't bug you after you've left, and they won't try to close you with the deal du jour and try to get your name on the dotted line. It'll take some of the pressure off of you. People often ask me about for sale by owner properties. Your agent can show for sale by owner properties, and many times the for sale by owner property will pay the agent a commission. Now, usually they're priced high, so you don't necessarily get a bargain buying a for sale by owner property. And one of the reasons they tend to be priced high is because the for sale by owner seller doesn't really know or understand how to price their property. And there may be issues in the transaction because of the inexperience of the seller. It's not being represented by a realtor on their side, and so that can cause some issues as well. So make sure if you're going to purchase a for sale by owner that you get proper representation and that you have a realtor to represent you. And while we're talking about representation, probably ought to talk about agency and agency law. In any real estate transaction, there are two parties to the transaction. There are the sellers and there are the buyers. And it's kind of like playing tennis. In an unrepresented sale, in other words, a for sale by owner, the seller looks out for themselves and the buyer looks out for themselves. And so that's called an unrepresented sale. There is no agency in that sale. Now there's seller agency, and this is where a real estate agent lists a house. Okay, so the real estate agent that is the listing agent works for the seller and has a fiduciary responsibility to that seller. So now the seller has someone on their side of the net. As buyer, you need some representing on your side. And so that's called buyer agency. And that's where an agent works for you and represents your interests in the transaction. And so if you look at it like a tennis match, it now looks more like a doubles match where you have someone on your side of the net that is helping you, the buyer, and the seller has someone on their side of the net helping them as a seller. Now, sometimes people think, well, I can get a better deal, can't I, if I go to the listing agent and buy the house from them? There's only one agent involved in the transaction. Won't I get a better deal? You might get a better deal that way. It's unlikely, but you could. The biggest problem with that is that you are now forcing that agent into what we call a limited agency agreement, and that's where they have to play both sides of the net. So they really can't fully represent you as a buyer, nor can they any longer fully represent their seller. So that is a situation that you want to try to avoid if at all possible, mainly because it puts the agent in an uncomfortable situation, and it means that you will not be fully represented as a buyer in that kind of a transaction. So let's say we find the perfect house, and now we're going to make an offer on it, okay? This is where that pre-approval that you got way back in the first step, this is where that pre-approval is so important because we're going to need to provide that documentation along with our offer when we make our offer. Now, you want to be careful of low-ball offers. A lot of people think, well, I'll go in low, I can always come up later. If the seller's first thought is no when they see your offer, then you really haven't helped yourself. What you want is to make an offer that is something that they have to consider as a reasonable, viable offer. If you go too low, you run the risk of alienating the seller and making them feel like you're not a sincere buyer. One of the things that you need to do before you make an offer is determine the market value of the home that you're wanting to buy. And your real estate agent can help you determine market value. So utilize them for that purpose and determine the market value of the property before you make the offer. Now, in order to get your offer accepted, you need to have the right price as well as the right terms and conditions. So there's usually more involved than just the pricing. And again, your agent can work through that purchase agreement with you and make sure that you're putting yourself in the best light in terms of pricing, terms and conditions and things of that sort. If you have to bid for a property, if there are multiple offers involved and you really want a property, and so you have to bid for it and you're asked to give your highest and best offer, well then keep in mind at that point you have to decide what is the maximum price you're willing to pay for that particular property, and then make the offer of that price, because you may not get another chance to make an offer in a bid situation. So you don't want to make an offer too low and then get outbid for the property and feel bad because you lost the property to another one when you might have been willing to pay a little bit more. So just be careful of that. The last thing you need to think about is earnest money, and this is a deposit that you're going to give to the seller that shows them that you're earnest in buying their property, and that earnest money will be in the form of a check that will be given to the seller upon acceptance of a purchase agreement. So that does not go to them until you get an accepted purchase agreement, and then that earnest money will be given to the seller's broker by your buyer's agent. And at that point, they will cash that check and it will go in a trust account, and then you will get credit for that earnest money at the closing, and that will become part of your down payment for the home. Now, once you've gotten an accepted purchase agreement, then time is of the essence. The clock begins ticking just as soon as you have a signed purchase agreement. So if you've not already done so, typically when you get a pre-approval, you've already done this step. But if for some reason you're going to switch lenders or use somebody else, first thing you need to do really quickly is fill out an application if you haven't already done that, and make sure you provide all the requested information right away. That's why it's good to get all that information rounded up before you even start looking for homes. So have your payment stubs, pay stubs, have your last couple years of tax returns, have all your information lined up and ready to go so that you can give your lender that information. And don't make financial changes or commitments. So don't quit your job and start a new job. Don't go out and buy a bunch of new furniture on time, or buy a new car, or take a vacation and put it on your credit card. Anything like that, any big change in your financial status could jeopardize your opportunity to get a loan. So make sure that you don't change any of that process. Now, as this goes through the process, it goes through what we call an underwriting process. So your mortgage paperwork, your credit information, your employment information, your tax return information, the house that you're buying information on that's all going to go to an underwriter at the mortgage company, and that underwriter will make the decision of whether to grant that loan or not. During that process, sometimes the underwriter may come back and ask for some additional information or clarification of information. So just understand that may happen. And then final approval and clear to close will typically be given anywhere from about a week prior to closing. You should get a final approval and clear to close. And keep in mind, as a real estate agent, we are paid at closing for a successful transaction. So if we don't successfully get you to the closing, then we don't get paid. So it's important to keep that in mind and realize that your agent is working on your behalf to get you where you need to go. Now, the second thing that you need to do very quickly after an accepted purchase agreement is to arrange for a home inspection. Now, your home inspector is going to go into the home and they're going to inspect the property, and they're looking for major defects. Along the way, they will find some minor defects and some maintenance items and things of that sort. But what your inspector's looking for and what you are looking for are major defects. These are defects with the property that are either a safety hazard, or if they're not corrected, they could significantly affect the value of the property. And there's going to be some language in the purchase agreement that defines a major defect, and your agent will review that information with you when you make your purchase agreement. And so you need to keep that in mind when you're responding to an inspection response. And you need to have reasonable expectations. Unless you're purchasing a new home, you cannot expect perfection in the home. So when you buy a used home, there are going to be some maintenance things. There are going to be some minor defects. You cannot expect that the seller will repair all those things. You can expect if there are safety hazards or there are some major defects that we could ask the seller to repair those items. So when you go through and you're making a response to the seller, once you've seen the inspection report, prioritize the items that you're going to ask for. Ask for those items that are most important to you. Now, keep in mind, you do have options when you make an inspection response. One is that the seller can agree to make the repairs and do the repairs that you've asked for. You could cancel the purchase if the seller's willing to let you out of the purchase, or you could renegotiate the purchase price to a lower purchase price in lieu of repairs. So you do have options available to you when you're doing a home inspection, and that is part of the purchase process. And that inspection occurs after the purchase agreement has been accepted. Now, also, there will be some title work that will be accomplished, and this will be prepared by the title company. Now, in a real estate transaction, typically the buyer has the ability to select the title company. Sometimes the seller's already selected a title company, and the buyer, in consultation with their agent, can decide if they want to use their own title company or if they're okay to use the seller's title company. That is a negotiated type thing, and so either could choose the title company. When you get title work, you want to check it for accuracy and look to see, are there any encumbrances that need to be settled that would be unusual. Typically, your title work is going to show that there's a mortgage that the sellers need to satisfy prior to selling. That mortgage amount should be lower than the sale price of the home. If it's not, you might want to beware, because now the seller may have to bring money to closing, and you need to determine, can they really afford to do that. Usually you'll get this title work about 15 days after the accepted purchase, so it'll take a week or so to work through. And ultimately, your title work is going to produce a title insurance policy for you. And that's basically a policy from the title company to you saying that you have clear title or ownership of the property. Now, in the case of who pays for title work, the seller is responsible for paying for your title policy that gives you clear title to the property. However, the lender usually also requires a policy written to them, and since you're the one getting the financing, typically the buyer is responsible to pay for the lender policy, and it's not a lot of money. Usually about $150. You can ask your mortgage person what they charge or what normally they estimate for that amount. And then, of course, you need to have homeowners insurance, and generally a lender requires this. It ensures their interest in the collateral, which is the home that you're purchasing. Typically, you're either going to pay for it in advance directly to your insurance company, and they're going to give you a receipt of payment, or sometimes you'll pay for it at closing, and they will charge you for that, and that'll be included in the amount of money that you pay at closing. There are some discounts that you can usually get on homeowners insurance. So when you're checking for your insurance, you might check first with the company that carries your automobile policy, because they will usually give you a discount on homeowners insurance if they also have your auto policy. You could also ask for a referral from your agent, and it might be a good time to not only get your homeowners insurance, but renegotiate your automobile insurance, and you might save some money on your auto insurance by combining the two into one policy. Now we're almost home. We've got utilities to think about, so you need to change your utilities into your name, and your agent can usually provide you with a list of the utility providers that you need to contact. Sometimes they can even arrange for someone to contact those utilities for you. Keep in mind that if this is the first time that you're getting service from a particular utility company, they may require deposits. So when you go to hook up your electric, if you haven't had electric in your name with this company before, they may want to have you do a deposit. So keep in mind there may be some deposits involved. And you'll want to make the change of utilities. The utilities go into your name effective the day of closing. And don't forget to change your address with the postal service so that you don't lose any mail. Now, a couple of days before closing, you're going to get a closing statement, and that should be available from your lender 3 days prior to closing. You want to review that carefully with the lender and make sure that it jives with everything that you've been told so far. Let your agent know if there are any problems, because your agent needs to be kept in the loop on this, and they can help you if any problems have come up. Also, you'll need to arrange for a wire transfer of funds. Anything over $10,000 is required to be a wire transfer to the title company. You want to be very careful of potential fraud with wire transfers, and so your title company, your lender, and your agent will make sure that you get the proper information. Do not allow a last minute email to change those instructions. And even if it comes from your lender or your agent or even from the title company, do not change your wire transfer instructions at the last minute. In fact, if something like that happens, you want to notify your agent or notify the title company or your lender right away, because it could be someone who has hacked an email account and is trying to steal your money. So it's very important to be careful with that. Now we've got all that work done and it's ready to get our new home. So we're going to be attending closing now. So yay! All of our hard work is done, and it's all over except for signing the paperwork. When you go to closing, you want to bring a photo ID. This is typically your driver's license, and the closing agent will want to make a copy of that photo ID, so make sure you bring it with you. Make sure you bring documentation of your wire transfer. Because if for some reason the title company questions your transfer, it's very helpful to make sure you have documentation of that transfer. So bring that information along with you to the closing. Also, if you have paid for your homeowner's insurance prior to the closing, then bring a paid receipt for your homeowner's insurance along with you, just to make sure that there's no questions about that. And congratulations on purchasing your new home. You now have a new home to move into, and at the end of closing, once all the documents are signed, it is now your home. And so congratulations. If you would like some help in the purchase of or in the process of purchasing a home, why don't you put us to work for you? You can visit us at www.realtyworldindy.com or give us a call at 317-324-8331, and we'd be glad to help you out with the purchase process. Thanks a lot, and I hope you have an awesome day.